6,100 crore rupees. About 90% of the fund raised would be via a fresh issue of shares. As per the IPO papers filed by Ola, the company has set a valuation of $4 billion, down 27% from its last funding round in December of 2023. Now, Ola Electric plans to list on August 9th. My colleague Yash Jain caught up with the Ola Electric top brass to get a sense of how the company was geared up for the future and their expectations from the IPO. He started by asking co-founder Bhavish Aggarwal about how the journey to a scheduled IPO has been so far.
Thank you, Bhavish. Thank you, Harish, for speaking to us at CNBC-TV18. And congratulations. This has been one primary issuance which has been awaited from the market's end. Let's start with the IPO itself. As I said, long awaited. And that long-awaited journey had a lot of ups and downs, specifically with what you were expecting in terms of valuations, what the market was willing to give. How was the entire process? What was the expectation at that at the start of it? And as we come closer, almost there for the launch, where has the IPO settled in terms of the market capitalization post-listing?
No, Yash, firstly, thank you so much for coming and speaking to us. It's been a very exciting process as far as we're concerned. You know, it's a long process. 1 saal lag gaya. And for us, as our group, it's our first IPO. So there's been a lot of learning, a lot of excitement as we've gone through the process. We filed our DRHP December last year. December last year, and then we got our approval in June, and then the final, we published our price band today.
Correct.
So it's been a very exciting process. We've had the opportunity to interact with the street, the institutional investors, the whole gamut of investors. And, you know, we've had very good interactions with the whole community of investors. And when we priced this IPO, we wanted to make sure we price it aggressively, in the sense that, you know, this is an Indian story. It's an Indian manufacturing story. And we want the participation, the support, and the involvement of the Indian retail, Indian institutional investor community to grow with us and grow with our story.
Correct.
And that's why we've left some money on the table. We've priced it aggressively, and you know, we are very happy to see the kind of early responses that people are you know, talking about.
Correct.
Absolutely. Yeah. I think it's been a fantastic journey last in a year or so in this whole process. It's interesting to see how the world looks at India and how they really value what we are building as an institution, as a group. I think that's where the whole engagement has been. Very positive. Very smart engagement, and I think that's a story for the future for retail to be part of.
Okay. Harish, before I come to you with one of the questions on the financials, you've decided to reduce the size of what you were planning to sell earlier. Now, what I want to understand from you, there were certain reports all along which spoke about how initially the expectation was about $7.5 billion US dollar of valuation, which now I think settles at about $3 billion. $4 billion. I'm sorry. Is it the reason why you've decided to sort of cut down on what you were intending to sell because you think there's better value that you expect going ahead, and you would want to save more to sort of, you know, look at that valuation and sort of maybe unlock that value at a higher price?
So yes, from the beginning, our issue is largely a primary issue. Even now, if you think almost 90% of, more than 90% of the capital raised is going to be primary.
Correct.
Because we are investing for growth, and we are investing for making this company and the Indian EV ecosystem much larger. So the secondary was always a small portion of it, and my share was a small part of that. And you're right, I have cut back a little bit because I do feel there's a lot of growth ahead. There's a lot of opportunity for investors to make money ahead, and I also see my own, you know, share value rise in the future.
Okay. Harish, to you, as far as the objects or the proceeds are concerned, you also mentioned that about 800 crores is what you expect to use towards repayment of certain borrowings. Where do the consolidated borrowings at this point of time stand for the company with the utilization of the IPO proceeds? Where do they go to? And what is a comfortable level that you see as far as borrowings are concerned? Would you again look to raise it as growth picks up going ahead? Or do you think these would be the levels after the reduction where you would want to stay at?
So if you look at our borrowing strategy, where we have borrowed is for creating assets.
Correct.
And we are continuing to strengthen our balance sheet. Hence, one of the objectives of the issue is actually repay of debt, because it further strengthens our balance sheet as we go into the new journey. And we always borrowed and have borrowed only for creating the two-wheeler factory, Giga factory. So our investments have been, obviously, we contribute our equity into it, and the borrowings are, substantiate that to that projects. So our borrowing strategy is primarily driving creation of sustainable tangible assets. So it's not for any other working capital use or anything like that.
Correct.
So borrowing strategies look, if we are embarking on these mega projects, banks are more than willing to participate in that journey with us. We are bringing in our share of equity, and banks are contributing the rest. So that's how borrowing strategy kind of spans out.
What will be the revised number post you use those proceeds, and how would it impact the finance cost largely for the company once the number goes down at this point?
So clearly, with repayment of borrowings, finance costs will drop. So we are using 800 crores from the IPO proceeds to reduce our borrowing. And hence the finance cost will drop. And the thing is that the overall borrowing is largely, as I said, we have a term loan for our Giga factory, and we have a term loan for our two-wheeler factory. So those term loans will remain on the balance sheet, and there are long-term term loans around it.
Okay. Bhavish, I want to speak to you a little about the revenue also. FY23, we saw a 6x jump. FY24, it almost doubled revenue from operations. What I want to understand from you, and I'm sure investors would want to look at that, by how soon do you expect some sort of stability in the revenue, that it's consistent at a particular level? What would be that consistent growth that you see in your revenues? And of course, by when do you expect to achieve that consistency or predictability in the revenue growth?
Yes, we've seen very strong revenue growth. Like you said, FY23 over 22 was almost 6x, or slightly higher probably. And FY24, which we saw in the RHP, was almost double. 5,300 crore almost from 2,700 crores.
Yes.
So we've seen very strong revenue growth, and I actually believe as a business and as an opportunity, we're just scratching the surface. EV is a mega trend, one of the most important mega trends in automotive after 100 years. 100 years ago, automotive moved from coal engines to internal combustion engines, and it's that level of a shift. And we are just scratching the surface within scooters, and so far we have a portfolio of scooters. In our book, we've talked about how our bikes are going to come along over the next year. So the potential for electrification of India's automotive segment is very large. And as we go along, we've also focused on building a foundation for electrification. Our strategy has been focused on vertical integration, building core manufacturing capabilities in-house, and especially the core R&D capabilities like our cell, which is going to be a foundation for accelerating EV penetration by reducing cost and by making core technology in India. And as we keep executing on this foundational element of our business model, the EV penetration will continue to rise category after category. So far it's scooters, then it'll be motorbikes, etc., etc. So I do foresee this whole opportunity for us and the whole industry, frankly, to grow into. Our revenues, I can't put a number to it today, as you understand, but we do expect revenue growth, and even after FY24, over the last 3 months, the monthly numbers are all in public domain in this industry on the Vahan portal. So you can see how our volumes have continued to grow over last year.
Correct. So you expect the aggressive revenue growth at least to continue for some time, considering how many new things that you're doing and new projects which are being taken.
Like I said, the penetration is EV penetration in India is still in its infancy.
Okay.
And this is a decadal journey in a sense, that we are on. Yeah.
Makes sense. Harish, with revenue, of course, the losses have also gone up. The losses widened from about 784 crore rupees in FY22 to about 1600 crore rupees in FY24. EBITDA has also, the operational performance has also moved in that direction. Now that you're entering the public market where profitability does make a lot of difference, vis-a-vis the private market, what I want to understand from you, what is the target that you're moving ahead with in terms of that glide path towards profitability? Is there a number in terms of, the time target that you see yourself turning profitable by?
I think you've seen our numbers FY23 to 24. The EBITDA has significantly improved, and we'll shortly post-listing announce our Q1 numbers. You'll continue to see the numbers there. So I can't really comment on the future numbers. But our business design and the underlying financial design has been very rock solid in terms of moving towards profitability. Because as we discussed initially, that it's a business, right? It has to generate returns for our stakeholders, for our investors, for our shareholders. And hence in our journey, that path is well set. As we scale, as we grow, we are on that path in a very solid way.
What's the destination? Which year?
Can't really comment on the future, projections.
Bhavish, you want to add because
This man won't let me add. But, I think like Harish said, I'll underline a point that FY24 over FY23, our revenues have gone up and our EBITDA percentage has improved significantly, and all of this is in the RHP book.
Correct.
Now, manufacturing as a business, as you scale revenue, you get very strong operating leverage because your fixed costs and all don't scale with revenue scale. And our volumes are continuing to scale. Last 3 months also in the Vahan portal, you can see how our volumes are scaling. So there is a point in the near future, I guess, where people can extrapolate themselves on when it gets to a break-even point.
Okay.
And like Harish said, our Q1 results will be out right after our listing.
Okay.
So that will also show investors more.
If I could just understand one number, 1600 crore was the loss figure for FY24, first 4 months of FY25. What is the kind of losses which have accumulated in the first 4 months? And just on the unit economics basis, per scooter loss, if you had to put, what would that number be right now?
See, again, both these numbers I can't give to you on the show. They're in a book, and when we give our Q1 results, you'll be able to see. But again, thematically, as I said, manufacturing is a scale business, and as the scale of our production is increasing, the cost doesn't increase with it. And Q1 over Q4, Q1 FY25 over Q4, scale has continued to increase.
Okay.
So in that sense, you can estimate where our margins are going. Another important point is, as we go on this scale and hence improving profitability journey, which we have demonstrated over the last 2 years in our FY24 and FY23, there are a few other key initiatives which are further going to improve cost and margin through this year and next year. So one of the core initiatives in that is our own cell, our own lithium-ion cell, the 4680 cell, which is going to come into production early next year. And as you know, in the EV, the biggest part of the cost is the cell. So as our cell comes in-house, as we start making that in-house, we further save a lot of money and further improve our margins. So all of these are roadmaps into profitability and then improving margins beyond profitability also.
Since you spoke about cells, of course, you're putting up that manufacturing facility. I want to understand from you, when does it come on board in terms of its operationability? And in terms of the capacity, what capacity do you plan to start with? Let's say a horizon of 3 to 5 years, how do you want to scale up that particular capacity?
Sure. See, cell is a very fundamental part of the EV ecosystem, and it's a foundation for electrification for the country. So we started this project 4 years ago, and we've made very significant progress, both in the technology development and the manufacturing setup. And we've also, we are the largest allocatee of the government PLI for cell manufacturing. The government has given us a 20 gigawatt hour allocation. So we are going to build that 20 gigawatt hour in phases. Phase 1 is 5 gigawatt hour. And out of phase 1A, which is what we are completing right now, is 1.5 gigawatt hour.
Okay.
And phase 1A gets productionized early next year. And we are in that process. We've already started trial productions in our factory. And by early next year, we will actually bring our fully tested cell made from our Giga factory into our own vehicles.
Okay.
So that's the timeline we are on. And then after that, we go into phase 2, which is 6.5 gigawatt hour, and then onwards to 20 gigawatt hour over the next few years.
Okay, so the entire production that comes out of the factory, is it going to be for captive use, or would you also be open to supplying it to other OEMs?
In the beginning, we will consume it. But let's say when we get to around a 5 gigawatt hour scale, that means roughly 1.5 million two-wheeler capacity.
Correct.
Because each two-wheeler, let's say, is 3 kilowatt hour. So 5 gigawatt hour is 1.5 million.
Correct.
So at that point, I think we can also go beyond our own needs and supply to others in the automotive industry, as well as think of opportunities like storage, be it personal storage or grid storage, and all. These are all optionalities for the future.
Understood. One question I want to understand, as we see the government subsidies, they've been sort of scaling down. In the budget also we saw the allocation reduced. There was no indication which was made to either FAME 3 or any other kind of subsidy addition. But at the same time, on the other hand, we see discounts increasing. We've seen discounts coming from you, ranging from about 15,000 to 25, 30,000 across models. Is there a problem that you've seen in this year when it comes to demand itself? Because A, you're reducing, you're being given less subsidy, but when prices should increase to that, you're actually giving more discounts.
So these are two different points, Yash, and I'll answer both separately. Let me first address the subsidy point. So on subsidies, there are two different types of subsidies. There's the FAME regime and there's the PLI regime.
Correct.
And within PLIs, there are two PLIs. There's the EV manufacturing PLI and then there's the cell manufacturing PLI. And we're the only company which has been selected for both PLIs, EV and cell manufacturing. FAME, over the last 2 years, the government has been clear that they are going to taper it off. And we support that. And we've seen FAME go from a per unit of almost 60,000 benefit to 10,000 now. And I think that's the right thing for the industry. And the industry has also responded by improving cost structures. And the industry continues to grow despite FAME being reduced to this level.
Correct.
And the government has also indicated that there's a FAME 3 on the horizon. Budget, it was not there in the budget, but it is on the horizon, as the government has said. But maybe the allocation will be a similar amount per vehicle. But the beauty is that the industry is now more or less beyond the need for FAME.
Okay.
So the FAME was a consumer subsidy. Now the regime is going from a consumption subsidy to a production incentive. And that's where, again, we have a very strong access to both the PLIs. So we are definitely using the advantage we get through the two PLIs. But also, as we have also continued to grow our technology and vertical manufacturing integration, our cost of production has continued to come down, and all of this can be made out from the numbers we have shared in the book.
In the book.
And looking ahead, now the second point you mentioned were discounts. Now discounts are tactical; they don't represent a structural scenario in the industry. Tactically, seasonality, etc., region-specific, we keep doing some discounts, industry keeps doing discounts, and the whole auto industry, beyond EVs, also has their own discount schemes basis monsoon, summer, blah, blah, blah.
Correct.
So that's a tactical thing which will continue, but broader, more structurally, I think we are less dependent on FAME. The whole industry is less dependent on FAME. It's moved towards a PLI construct where we have the biggest advantage. And we've also invested in our technology and our vertical manufacturing to fundamentally reduce our cost structure.
Okay. Two interesting things that, of course, the company is also in the process of working on. One is the electric car and the electric bike. On both those aspects, how would you want to sort of people to look at that, both those interesting avenues? When does electric bike come on board? When does the car come on board? What are the plans?
Bike is something we are very excited about. We announced our bikes last year, 15th August, and as you know, your viewers also would know, 15th August is our annual product launch day.
Correct.
For 3 years, we've been launching new products every 15th August, India's Independence Day. So this year also we have something very exciting lined up for 15th August, which is roughly a week after our listing, so it will be even more exciting.
Correct.
So last 15th August we showcased bikes, and hopefully we will have some very exciting announcements this year to showcase on the bike front to people. Car, we have always been clear that it's not part of our agenda. Right? We are focused on the two-wheeler space. Scooters is where we have a lot of scale already. And now the next focus for us is the bikes.
Okay. One last question to you as we conclude this interaction. I was just looking at the RHP document also. You are currently working at about 49% capacity utilization. What is the level that you're looking at here? What can this be scaled up to? And with that kind of, what would be the additional manufacturing that would come on board?
Let me first explain the capacity side. So our infrastructure, which is the two-wheeler factory, is actually built for up to 4 million units. The whole civil infrastructure, the utilities, etc., that's all geared to handle up to 4 million. We have an installed capacity within the factory for 1 million units. And this 49% is, of course, historic March, and as we see the current data, we see that trend going up. So we are well on verge to use our capacity in the current financial year. And other than that, capacity utilization will continue to grow as we scale up. The motorcycles are going to come. So as the product launches happen, the capacity utilization will continue to grow. But we have designed a capacity for a significantly larger scale. Investments have been made upfront, and as we leverage that, the performance capacity will go up.
Okay. Thank you, Bhavish. Thank you, Harish, for speaking to CNBC-TV18. I wish you all the best for the IPO, of course, and for all the plans that you've lined up ahead. Thank you so much for speaking to us. Thank you.
Thank you.
Thank you.